The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hey, TGIF, everybody. Thanks for tuning in to Breakout Investing on TFNN. Now 5 days a week from 3 to 4 Eastern. 12 to 1 on the West Coast where I am. But give me a call if you would like, 877-927-6648. You can get my show as a podcast on iTunes if you can't listen live. So if you missed the show one day, just head over to iTunes, download the podcast there. Don't forget you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi right in your smartphone browser, and you can listen to the stream that way as well. And when I go over charts on my program, which I do on a daily basis, you can look at those charts live right along with me in Tiger TV. You can watch Tiger TV on your PC. Just go to tfnn.com, tune in to Channel 1. That's where the show is carried live, and the show is archived on Channel 13. Tiger TV is also viewable on your handheld device as well. All right, let's start by taking a look at the Russell 2000 Small Cap Index here. Small caps outperforming today. Let's go ahead and do a little refresh here. Last check, the Russell was up close to 6 points, 0.7% to 818.88, almost 819. The swing point for the Russell 2000 here is 820.44. So we do have possible breakout taking shape in small caps. That is a good sign. Let's take a look at the S&P 500 here. S&P 500 very close to, or closing in on its spring high of 1422 here. It is not doing much today, up close to 2 points, maybe 0.1% to 1417. S&P 500 working on its sixth straight weekly price gain. So I think I have a weekly chart here of the S&P 500, and just to reiterate, yes. So here you've got this nice base taking shape in the benchmark index. It looks like it's on the verge of a breakout here, but you see 6 straight up weeks, pretty strong move up off the bottom. You can see weekly volume here was increasing in the early part of the move, and now it is kind of decreasing in the latter stage. This is all the market bears out there talking about this lack of conviction behind the buying, and it is a valid point. I would just say that this has been a deviant market for quite some time. It's been a counterintuitive market. It's been that's the way the market works. It does things that sometimes don't make sense. So even though volume hasn't been great, we are in a low volume time of year here. And really, the weekly chart of the S&P 500 does provide good perspective, doesn't it? Because if you're looking in Tiger TV, you can see here weekly volume 3 weeks ago, 2 weeks ago, getting lighter and lighter as we approach these spring highs. So what does that mean? Well, it means that it wouldn't be surprising to see a little bit of a pullback here before we get a meaningful breakout for the S&P 500. Wouldn't be surprised. It would be actually, price action that wouldn't be surprising at all after 6 straight up weeks for the S&P 500. So if we do get a shakeout, hopefully it occurs in a light volume. I think a lot of leaders out there. There are some cushions that have been built up big enough. A lot of stocks acting well. Market is serving up some breakouts here, which is good to see. So even if we do see a pullback in the near term, I suspect it'll be fairly short-lived. Let's move over, take a look at the NASDAQ Composite here. NASDAQ Composite, this is a daily chart here. It is up 11 points, 0.4% to 3,073. Now, the S&P 500 isn't working on 5 weeks up in a row, 6 week up in a row, but it is working on 10 up weeks out of the past 11. I mean, just an incredible move for the NASDAQ Composite, and so we can see it's lagging the small caps Russell 2000 here by a little bit, but still up 11 points, pretty much up near its session high. to 3,073. Now, impressive volume yesterday on the NASDAQ. We had a little over 1.9 billion shares. That was quite a bit higher than what we saw on Wednesday. So it was a nice accumulation day for the NASDAQ. Today, looks like we're going to be back down to around 1.6 billion. Pretty light volume. Thought today was options expiration. Thought volume was supposed to be, heavy when options expire. Sometimes that's the case, sometimes it's not. Volume not heavy on the NASDAQ today. Again, tracking about 15-20% lighter than the heavy volume day we saw yesterday. A little bit different story on the New York Stock Exchange. Volume yesterday, 591 million shares, well below average. Today, probably looking at over 700 million, so a little bit of volume on the New York Stock Exchange today, but 725 million shares, that's about what it normally trades on any given day. So, overall, listen, the market trend is upward. That's what I've been telling my Ultimate Growth Stocks subscribers. The market trend is upward until proven otherwise, which means it's okay to look for opportunities to put money to work, and that is what I've been doing with the Ultimate Growth Stocks model portfolio. If you want to get a 30-day free trial to my weekly newsletter, you get email buy and sell alerts, market updates in between, but I do put out an extensive update every Tuesday. And if you want to get a free trial, you can do that right on the homepage of TFNN.com. Just look in the carousel there, Ken Shreve's Ultimate Growth Stocks. You can also click on the newsletters tab on the homepage and then click on newsletters and then investment newsletters. KenShreve.com takes you right to my information page at TFNN where you can access everything on one page. That's an easy way to find out more information about Ultimate Growth Stocks there as well. All right, Germany's Angela Merkel, a little bit of news earlier today, said that Germany was committed to doing everything necessary to save the euro, sort of parroting what Mario Draghi said, 7 to 10 days ago. Merkel's comments came at a news conference with Canadian Prime Minister Stephen Harper. So, again, recent market strength, probably in anticipation of more action from at least the European Central Bank, bond buying, whatever it's going to be, and possibly additional action from the Fed when they next meet on September 12th and 13th. I suppose there's a chance the Fed may stand pat, but I don't know. I think there's probably going to see something from them at the next meeting. We've had a couple of very weak readings on manufacturing data this week, starting with the Empire Manufacturing Index. That's sort of a survey of manufacturing activity in the New York region, and also the Philly Fed yesterday, which is a Mid-Atlantic survey of activity that's been contracting for several months in a row. So checking crude oil today, closed at 96.01 a barrel. Good week for crude oil, up 3.4% for the week. Today only up 41 cents. Again, the final settle on crude oil, 96.01. Gold up 20 cents to $1,619.40 an ounce. The U.S. dollar making a little bit of headway today, but not much. The U.S. dollar index recently at 82.59, up about 23 ticks. You can see yesterday finished near its session low. Higher today, but still stuck underneath that 50-day line. That's really the line in the sand right now. The 50-day moving average for the U.S. dollar index is 82.64. So still about 5 ticks underneath the 50-day. U.S. dollar continues to look pretty weak to me. Bond yields finally giving a little back today after an impressive move, no doubt about it. Here's the yield on the 10-year note, and really uncanny how these moving averages, how stocks or ETFs or bond yields, how they react at key support or resistance levels, because the yield on the 10-year note has been moving higher since pretty much since July. That yield got up to about 1.87. That's the 200-day moving average, 1.87%. But right now it is at 1.81. So could be some resistance there, but bond yields, at least on the 10-year note, pulling back a little bit today at 1.82%. And then the yield on the 30-year, let's check in on that as well. Same situation, coming up against resistance here. The yield on the 30-year bond right now about 2.93%. Let's check in on shares of Apple today. Apple is a current holding in my Ultimate Growth Stocks model portfolio. It has been doing very well, right at its session high here. Volume pretty light in the stock yesterday. Good volume push today in the stock. It's probably only going to end up being about average volume, maybe a little bit above average. So a little bit of accumulation going on in Apple today. Up $10.55, 1.7% to $646.89. $646.89. Good day for Apple, and I believe it is over a high that it put in. When was that high? I think it was the high of 644 was back in April 10th. So 644 all the way back here. So finally breaking out of this big long base here. And again, volume today not too bad. It's going to come in nicely higher than yesterday, and also probably going to be a little bit above average. So a little bit of accumulation going on in Apple today. Jefferies and Company coming out with some comments. Research report from that analyst said the company has begun production of the iPad mini, a smaller version of the iPad. And Jefferies analyst Peter Misek lifted his price target to $900 a share from $800 due to what he believes will be continued strong demand for iPads, iPhones, and an expected launch of iTV by the end of the company's fiscal first quarter next year. So a lot of buyers in Apple today. That's good to see. Let's check in on shares of Facebook. Remember, a whole bunch of shares got released yesterday. Facebook having more troubles today, down 3.8% to $19.12, a new 52-week low for that stock as well. Heavy volume movers today. Let's take a look at Francesca's Holdings. This is an interesting small cap retailer. Francesca's good, strong, heavy volume breakout here over 32.59. This is a cup with handle breakout. Volume huge in the stock today. Has traded something like 1.9 million shares. That is well above its average daily volume of 765,000. So, breakouts with conviction are always good to see, and you do have that with Francesca's. The company has not reported earnings yet, but they will be coming out in early September. This company operates a chain of retail boutiques offering apparel, jewelry, accessories, and other gifts to female customers. So earnings aren't due until early September, but fast growth here. Good, well-run company. Profit expected to come in at 23 cents a share, up 53% from a year ago. Sales up 39% to 71.1 million. So interesting action in small caps today. Russell 2000 looks like it's finally ready to join the party. Large cap tech acting well. Not only Apple, but some other large cap tech names acting quite good as well. We'll check in on some of those in a moment. Ken Shreve with you on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pezzamento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Before we went to break, talking about a good, solid, heavy volume breakout for Francesca's Holdings, a more speculative name in the retail space, but a good, solid, heavy volume move today. Good base breakout. Some other heavy volume movers today. Let's take a look at shares of Foot Locker moving on pretty decent earnings here. Shares of Foot Locker up 2.1% to $35.21. You can see it hit an intraday high of 36 and has pulled well off its high, actually trading near its low now. So never like to see that on a gap up. Anytime a stock gaps up, you'd like to see it hold on to its gains, at least finish in the top half or top third of its trading range. So some sellers in Foot Locker after it hit a high of 36. This is an extended stock, though. The fact that it's at 35.21, it possibly is coming back into range here, but the last breakout for Foot Locker was when it broke out over 33.29. This was the high the stock put in late May over here. So to me, this still looks like an extended stock, not one that I would be a buyer up at current levels. Foot Locker, of course, is an athletic footwear retailer. Gross margin improved as profit rose 63% from a year ago to 39 cents a share. That was about 4 cents above estimates. Sales up 7% to $1.37 billion, slightly above expectations as well. So Foot Locker executing nicely, even though there are some sellers in the stock today after early strength. And let's give some credit to the Gap, a stock that I've been What Gap is doing, you don't see very often. Normally, big stock market leaders that kind of that peak and roll over in price because of slowing growth prospects, or maybe the stock has just made a huge price move, with which Gap did definitely in the 80s and 90s. Gap is in the midst of a very, very successful turnaround here. Stock is up another 5% today to 36.07. Again, another stock that I absolutely would not chase up here. Why? Because it is very extended after a breakout over 29.23. This was the swing point all the way back over here. So you can see a big gap up here in, was that late July, early August. A lot of people afraid to buy gaps up in price, and I got to tell you, I was not a buyer when gapped up here, but you can see if you were in this stock at 32 and a half bucks a share when it gapped up on that day, you'd have a nice 10% gain in the stock at this point, if not more. But numbers at Gap very solid. Earnings up 40% to 49 cents a share. Sales up 6% to 3.58 billion. Both of those numbers were above expectations. They raised its forecast, but from a prior forecast, but still a little bit below what the market was looking for. Investors don't seem to mind, though, today. Stock up again 5% to 36.07. Gap has the Old Navy brand that is doing well, Banana Republic, and Athleta, which is sort of like a Lululemon type brand, sort of women's athletic wear, yoga, running, things like that. So Jefferies and Company had positive comments about Apple that we went over in the last segment. They also maintained their buy rating on Gap and $45 price target. So at 36 bucks a share, even though it is extended right now, I'd like to see Gap base a little bit, digest its gains, and then maybe we'll see an alternate entry point here. Let's take a look at shares of TransDigm Group, TDG, on the New York Stock Exchange, trying to break out over 136 bucks a share, and doing a pretty good job today. This is another sort of straight up off the bottom breakout, which I'm always a little bit wary of. We've seen a lot of them lately, especially in the disk drive makers, Seagate Technologies, Western Digital. These big moves hard up off the bottom. Typically, it's good to see a little handle area form here, see some sellers get shaken out of the stock, but volume pretty good in TransDigm Group today. Again, making progress, trying to break out over 136, makes engineered aircraft components. I think I have a weekly chart here for TransDigm. Let's take a look. There it is. See, the weeklies give you a much different perspective. So you can see it took about 4 weeks to build the left side of the base here, and then a little less than 2 weeks to break out. So big move off the bottom. I'm a little wary of this stock. A lot of distribution here in the chart. You can see these big, heavy volume down weeks here. Not much in the way of accumulation. And TransDigm Group, again, when you look back over the past few years, the bull market started in March 2009. TransDigm Group, along with a lot of other stocks, put their lows in late 2008. You're talking at about a stock here that's up 500% during the most recent bull market. So in my view, I think a good argument can be made that the big money has already been made here. Good day nonetheless for TransDigm Group, and it could work here. I'm a little wary. All right, folks, headed into break number 2. Be back in about 4 minutes. You're listening to Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Hearing a lot of chatter about the risk on trade being on now, and money kind of rotating out of certain areas of the market, and you're certainly seeing that in the utility select sector SPDR ETF. This is the XLU, down 10 cents today, 0.3%, underperforming the market to 37.09. Has given up its 50-day moving average here. But the real story with the XLU was this heavy volume reversal here in late July. Big volume, big downside, a big burst of institutional selling, if you will. That was specifically on August 1st. That was the big percentage decline here. You can see a huge volume, and you can see weakness has followed after that. So definitely, money coming out of utilities here that is, finding its way into growth stocks for now. We talked about shares of Apple having a big day today. Let's check back in here, up $9.70 to $646.04. Shares of eBay also having a good day, outperforming nicely. eBay right now, let's see here. See if I can find eBay. There it is. Up $1.08, 2.4% to 46.87. New 52-week high for shares of eBay. Volume on track to come in a little bit little bit higher than what we saw yesterday, so mild accumulation going on in eBay as well. And of course, Amazon. Some of these large cap tech names. Amazon had finally a breakout yesterday. Stock tried to get going. Not much follow through today in Amazon. That's perhaps a little bit of a concern, but not a big deal. Down 80 cents right now to 240.75, but a little juice behind Amazon's move as well. So we're seeing some outflows in the utility sector. Healthcare names under some pressure as well here. Let's take a look at shares of Biogen IDEC. Last check, it was underperforming the market. Yeah, trading near its session low. A little bit of volume behind the downside move here for Biogen, down 1.3% to 144.95. Still holding above its 50-day moving average. Here you can see it's been a support level in the past. And also another big leader here, Alexion Pharmaceuticals, under some pretty serious selling pressure since the end of July, getting pretty close to its 50-day moving average here. Shares of Alexion down 1.4% today to 102.19. This is a one-drug company, but its key drug Soliris is a huge moneymaker. Probably going to see other indications for this drug too, which is why the stock has been performing so well. But Alexion under some pressure in recent days. So healthcare in general, no matter what subgroup you're looking in, definitely there's been some selling pressure here. DaVita, another name that I've been watching, underperforming a little bit today, but not by much, down 76 cents to 97.53, still holding above its 50-day moving average as well. DaVita operates outpatient kidney dialysis centers around the U.S. So healthcare names generally weak here. A couple names I found in the sector that actually are looking good, bouncing back after some weakness. You can see shares of Athena Health coming in late July, early August, but shares outperforming nicely today, up 2.5% to 92.23 after recent weakness. And also Edwards Life Sciences. This is a company that makes advanced cardiovascular products, and Edwards Life Sciences fell below its 50-day moving average. A little bit of juice, a little bit of volume in the stock. Today it's up 2.6% to $100.37, trying to reclaim its 50-day moving average. Not buyable here, a stock that is consolidating gains, and like to see this one prove itself a bit more. But a good solid two actually solid companies here, Edwards Life Sciences and also Athena Health. Economic data today, we had just one piece of data, the Michigan Consumer Sentiment Index, the preliminary August reading of the University of Michigan Consumer Sentiment Index increased to 73.6. That's the highest level since May, from a final reading in July of 72.3. So pretty decent reading in consumer confidence there. Take a look at shares of Avago Technologies, AVGO. This is a Singapore-based chip designer. They reported earnings late Thursday. This was a stock that was forming a base, looked like it had a chance to maybe break out over 37, 38 bucks a share, and it tried to, but it has reversed. Now, the thing with Avago is that you're talking lukewarm fundamentals. Now, they have this wireless product cycle that people are still keen on. I believe some of their products are found in, I think it's one of their amplifiers that might be in the Apple iPhone, but at one point they were doing business with Apple, but earnings were only up 6% to 72 cents a share. Sales were flat at $606 million. One of the things I look for when I'm buying growth stocks or adding growth stocks to my model portfolio, I really do want to see not only a consistent, stable track record of earnings and sales growth, but I also like to see big percentage increases in recent quarters. So, 6% earnings growth really doesn't cut it for me, and sales flat at $606 million, also not that hot. But Jefferies came out and Jefferies has actually been in the news quite a bit today, talking about a whole slew of stocks. Today, Jefferies said that weakness in the stock would be a buying opportunity. They said its wireless product cycle is one of the best in the chip space. They maintain their buy rating on the stock with a $43 price target. But very poor price action in Avago Technologies today. Some big retail movers. Take a look at Ann Incorporated. Used to be known as Ann Taylor. I mean, just a monster move for Ann. Up 22%, $6.10 to $34.24. Big beat on the bottom line. They were expected to earn 51 cents a share. They earned 63 cents. That's up 34% from a year year ago. Sales beat by about $10 million, up 7% to $595 million. So good bottom line and top line beat for Ann. Overall, same-store sales rose 4.7%. And at Ann Taylor, the same-store sales rose 5.6% and 4.2% for its Loft brand. So I would suspect that Ann had a fairly significant short position before these numbers came out, even though it was actually in a pretty good technical setup before today. But yeah, fairly a days to cover ratio of 5.2. So that's a fairly high short position. But you can see the stock was in a pretty bullish cup with handle pattern here before the earnings came out. Big gap up. Obviously, you know, a tough stock to buy. A gap up this big, a stock up 21%. You know, I've always said I'm not averse to buying gaps up in price, but a 21, 22% move, I'll take a pass on Ann right now. Taking a look at Hibbett Sporting Goods, HIBB. This is another earnings report that came out before the open today. Tough day for Hibbett, sort of reacting to earnings similar to the way Dick's did, even though it's bounced back in recent days. Shares of Hibbett down 4.2% to $59.19. Big wide intraday trading range for the stock today. Hits a high of $60.66, a low of $55. So more than a 5-point intraday swing for shares of Hibbett Sporting Goods. Earnings were up 42% to 30 cents a share, 2 cents above estimates. Sales up 8% to $165.4 million. That was slightly below expectations. Same-store sales growth pretty decent in the quarter at 4.8%, but this looks like a broken stock to me now. Let's take a look at shares of Cheesecake Factory. Nice little technical setup here. The restaurant group overall sort of iffy, but I got to tell you, Cheesecake looks pretty strong here, setting up in a good base. Could see a breakout in this name sooner rather than later if this market continues to hold up the way it is. Swing point of 34.20 right now after a recent breakout over 33.30. So you've had a couple. The 33.30 swing point was back over, I think, in this area, but you had a big gap up, breakout over 33.30, and then a little consolidation. The new swing point is 34.20. So Cake is in a pretty good technical setup here. And let's take a look at the weekly chart, which can kind of smooth things out a little bit. And here we have the good base setting up here, consolidating above its 10-week moving average. So Cake, bottom line, in a good technical setup here. Take a look at shares of Google. Google, another large cap tech name, working nicely here. Had some good follow through. Some heavy volume early in the week. Last week, volume has started to dry up a little bit, but shares of Google up another $2.74 today to $675.61. Swing over. Take a look at a weekly for Google. And we'll see a stock that is still in the early stages of a breakout here, working on 5 straight weekly price gains. I can't stress it enough. These stocks that come straight up off the bottom, they're a little more risky. When you buy a breakout, you always like to see sort of a little handle area form where the last sellers get shaken out. You didn't have that happen at all with Google. Took some emails, took some calls about Google recently, and again, after 5 straight up days, even though it looks like the stock could be in the early stages of a move here, I suspect we're probably going to see a little bit of selling pressure here eventually, and probably going to get a better opportunity to get in. But one of the best bear cases I hear right now, yes, we know the volume hasn't been great, and low volume moves generally should be looked at with a suspicious eye. But the other thing to keep in mind is that we are, if you look at the start of the bull market, which was back in March 2009, we're more than 3 years into a bull run here. There have been some pullbacks, but we're kind of long in the tooth. So if you subscribe to the fact that this bull market is going on 3+ years, that's the typical run of a bull market. So some will say that we're in the tail end of a run here. 2013 could be soft, and that could play out. But again, right now, I'm going by the fact that I'm trying not to predict and look too far out. The market could be acting so well right now in anticipation of perhaps a 2013 economically that looks a little better. Maybe that's in 2013 we start to see the unemployment rate dip below 8, and we start to see the economy start creating meaningful jobs again. So the trend is upward for now until leaders start to break down, until individual stocks, leading stocks, really start to show adverse price and volume trends. I'm not going to fight the trend for now. Check in on shares of Ross Stores, R-O-S-T. This stock was outperforming, and it had kind of a rough day yesterday, but closed mostly unchanged. It's up 1.4% today to 69.41. I know Ross Stores still has its fans out there trying to break out over $69 a share. It's only about 41 cents. It's just kind of a breakout that's struggling here. But I wanted to talk about Ross Stores because even though it is one of the best performing retailers out there, I did save a monthly chart here, and with Ross Stores you're looking at a stock that since November 2008 is up more than 500%. So no matter what Ross does from here, I just feel that this is not the type of stock I want to buy that's up 500% in a little more than in about 3.5 years. Okay, I think the argument can be made that the big money has been made here. The goal is really to find growth stocks that are still in the early stages of a potential move, and I just don't think you can say that with Ross Stores. So even though it is continuing to show relative price strength here, and trying to go for another breakout over $69 a share, I'm going to take a pass for now. The Fresh Market is a name that I recently took some profits in recently for my Ultimate Growth Stocks model portfolio. Sometimes when I take profits in a leading growth stock that's performing well, just being conservative, taking some money off the table, doesn't mean I won't revisit the stock. And I'm still encouraged here by the Fresh Market, talking about a company still in the early stages of a potential move here. It's possible, just looking at its chart here, that the Fresh Market, if new money continues to come in from the sidelines, we could see a new breakout over $62 a share. So if the price is there and the volume is there, this is a stock that I could easily see getting back into. I've said in the past I prefer it over Whole Foods. I think the Fresh Market is just in the earlier stages of growth. It's a new issue, came public not that long ago, and they have many more stores to open than Whole Foods at this point. And Fresh Market has shown it can manage its growth strategy, and it's a good solid 20 to 25% grower. So the Fresh Market right now up 51 cents to 60.51, sitting just underneath a swing point of 62. We've been talking about shares of Chico's. Chico's is setting up, it was setting up nicely ahead of earnings next week. They report on August 22nd. Good solid breakout for the stock today. See, these are not bad things to see when we're debating whether or not this market wants to go higher. If you're in a strong market, you want to see good quality stocks breaking out in heavy volume. That's what you have with Chico's here, up 3.9% today to 16.75. I think we have a weekly chart here for Chico's. Let's take a look at a different perspective. And again, stock still, arguably in the early stages of a move here. Big breakout from a cup with handle base. The swing point just over $16 a share. So probably still early with Chico's as well. But women's retailer expected to produce strong growth when it reports next week on August 22nd. Headed into the final break, folks. Stick with me. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing. So we have bonds up, we've got the U.S. dollar index up, and we've got the market up as the S&P 500 and Dow go for 6 straight weekly price gains in a row. As we head into the close here, the Dow up 16.5 points to 13,266. The NASDAQ up a little over 11 points, 0.4% to 3,073, and the S&P 500 up about 1.5 points to 1416. Small caps outperforming today. I know Tom was talking about them on his show yesterday. Russell 2000 here going for a breakout over 820.44. The small cap index right now, as we head into the close, up close to 6 points, 0.7% to 819. So only 1.44 points away from that swing point of 820.44. Set back here if you're watching in Tiger TV with me. Checking in on some other growth names looking good here. Let's take a look at Terra Data, TDC. This is, it's actually a good double bottom breakout recently. The stock has reversed, given back most of its gains, but it's still up 26 cents to 75.93. Terra Data is a provider of analytic data solutions. They focus on integrated data warehousing, big data analytics, analytics and business applications. If you look at a weekly chart for Teradata, this is an interesting company that I still think has a chance of working in this market. I am not long the stock yet, but it's a good double bottom breakout here over 73.74. But another situation here of 6 straight up weeks in a row. When you see a move hard up off the bottom like this, not uncommon at all to see a little bit of a shakeout. If we do get a shakeout here in Teradata, that could present an alternate buy point. So another one to keep on your watch list. And also impressed with the way Equinix continues to trade. It's made a big price run, but it is up 1.6% today, outperforming nicely to 188.24. The swing point here is right around 189, so could see a breakout sooner rather than later in EQIX as well. This is an operator of data centers. Companies basically lease space from Equinix to store their servers to handle large amounts of data. Shares of LinkedIn underperforming today. This one's a hard stock to figure out. Starting to look weaker and weaker by the day. LinkedIn underperforming materially today, down 2.5% to 101.38, back below its 50-day moving average. Thought this one. Sometimes these breakouts aren't going to work, and it's really a good idea to, if you see a stock not acting right, cut your losses short, move on, don't ask questions. This is a stock that I've tried in the past. I've just limited my losses, kept my losses very small. When you take small losses, these can easily be overcome. Never a problem taking a small loss in a stock. LinkedIn just not looking all that great here. Again, underperforming today as well. And finally, shares of Regeneron Pharmaceuticals. This is a name that I still think has a chance to work here. Watching this one for a breakout over 142. Institutional quality drug maker here. Stock is up 56 cents today to 138.04. Still about 3 or 4 more points to go before it gets to that swing point, but Regeneron, a high quality name here. All right, taking a look at economic data. Next week we've got the FOMC minutes due Tuesday. Wednesday we've got existing home sales. Thursday new home sales. So remember, we had housing starts, building permit data yesterday. The home builders continue to act pretty well here. Let's take a look at the ITB. This is the ETF that tracks the home builders. Lennar is a top holding. ITB up another 11 cents today to 18.02 after a recent breakout over 17.25 thereabouts. So, and then earnings next week: Best Buy, Dell, Chico's, Toll Brothers, Salesforce.com. A few more earnings reports, but we're pretty much done with earnings season. Great weekend, everyone. Tom O'Brien Show coming up next. We'll see you on Monday.